Okay, we are recording.
Wonderful. Well, hi, everybody. Welcome to this month's Females in Finance Meet the Expert series. My name is Teague Wright. Hello. Might just add that hashtag chicks rule. And I am the Chief Operating Officer here at Highland Capital Brokerage. So what I thought we would do today is I have a couple of housekeeping notes. This is being recorded, so as you listen through it, some of it may not apply, like the muting of your phone, if you could do that now. And of course, if you're listening to the recording, you don't need to mute your phone. I'm also joined by who I usually describe as the pretty blonde one with the great personality, but they're both really pretty and they're both blonde and they both have great personalities. You got Nancy Sim in a blue dress. You want to wave and say hi to everybody, Nancy?
Hello.
And Dorothy Penny.
Hi.
There you go. Thank you, Dorothy. Nancy Sim is the Director of Longevity Planning and Long-Term Care here at Highland, and Dorothy Penny is an underwriting consultant on our national underwriting team. Let me tell you, I'll come back to them and the role they're going to play in the next 30 or so minutes of this presentation. But let me first just give you a sense of what we're going to do here. If time permits and it's, if you will, appropriate, we'll do some Q&A. If not, then you'll also know your call to action is you can get a hold of the three of us, but your partners here at Highland, Jennifer Connelly and Anne-Marie Norek, our colleagues, are available for all of your questions and follow-ups, and I will remind you who they are at the end of today's call. So what we wanted to do here was focus on a topic, particularly around longevity planning, underwriting for morbidity causes and for mortality around life insurance. But before we talk about that and our subject matter experts get into it, let me just first tell you a little bit about Highland. We are so pleased to be the insurance distribution company for Females in Finance and give a shout out to Cheryl for this partnership. We're really proud about it. And Highland Capital Brokerage, with the name brokerage in our title, is that we're a wholesaler and we specialize in customizing and collaborating with firms like yours, financial services professionals, to be able to help grow your insurance business. We think of ourselves as a distribution company. We focus on life insurance, as I've mentioned already a couple times, and annuity planning. And within that, we are committed to looking at ways that are, if you will, strategic to partner with you to meet your objectives on trying to drive revenue from those two different product lines that you may or may not have a lot of experience with. We have more tools and more resources in the life insurance and annuity arena than I could just talk at you about. And the point of today's, if you will, highlight is around underwriting. And for a lot of financial services professionals, underwriting is, I guess, on one hand, daunting. On the other hand, can be very frustrating. And misunderstood. And we take a lot of pride in our value proposition as a whole, in our underwriting prowess and the proficiency of being able to toggle back and forth between mortality planning and morbidity planning from an underwriting perspective. A lot of the permanent insurance being sold today has long-term care riders on it. And that's why we wanted to bring to you the combination of both Nancy and Dorothy. So as we get ready to meet your experts here, I'm going to ask them some questions. They are going to answer them for you in anticipating what we thought it is that you might want to learn about today. And so without further ado, I'm going to tee them up. And I believe I've got the lovely Dorothy Penny up first. So given what I was talking about with this being a focused deep dive on underwriting, Dorothy, what do you find for our audience to be the most important factor in writing life or LTC business?
Well, honestly, I think the most important thing that you can do is to manage your client's expectations from the very beginning. So that includes helping your client to see what their need or their problem is that you are trying to solve. Maybe it's an estate planning need, to preserve the assets, or a personal need, income replacement, or trying to find some college funding. Maybe it's a business need, buy, sell plan, or a key man policy, or perhaps something with long-term care needs. But if you can help the client to see the problem that you're trying to solve, then you can move to the next step, which is be then determining the type of product that's going to actually solve their need. It might be a term, it might be a VUL, it might be a long-term care hybrid, whatever the case may be. Once they see their need and you can find a plan that helps fix it, then the next important thing is to solve or to manage those expectations from a pricing standpoint. So this is my favorite subject to talk about, is field underwriting and the need for good field underwriting, because it really helps prevent unpleasant surprises once underwriting gets underway. So you can have the conversation with Mr. Smith about his prostate at the beginning of this process, or you can have the conversation with Mr. Smith about his prostate while you're simultaneously telling him that his premium is going to be $5,000 more than what you originally told him. So unpleasant, yes, but it's going to come up. So you might as well be able to control that portion of the conversation and have that information and know what's happening from the get-go and be able to really present some more realistic expectations. And I think managing those expectations is probably the most important thing that you can do from a field underwriting perspective.
So it's interesting, Dorothy, not only are our guests and the members of the Females in Finance group able to see you, which is, first of all, kind of uncommon to underwriting. We don't have underwriting in the shadows here at Highland. We want you, and you particularly in this situation, to be partners with these ladies. And so how can you help them with this process? You talked a lot about the sale and the need of their client, but how, from an underwriting perspective, can you help collaborate with the women on the call today?
Well, Highland has a team of actually 5 underwriters. All of us in-house all work for Highland, and we help out in various regions of the country, but we all do basically the same thing. We can be around for the I got a gal discussions. I have a gal that had breast cancer a couple of years ago. What are the odds that she can get coverage? That type of a thing, from just a simple phone call. Maybe you only have some basic information, like maybe their medications that they're taking. Give us a call. We can help at least kind of, start at least a preliminary idea of where they might end up being rated. We help out with high-level informals. We review all cases that are actually go through underwriting and then they're other than applied for. So we go through and just determine, is this a really good offer? Is this not such a good offer? Maybe we should pivot to a different carrier. So basically, all the underwriting needs that happen during a case, we can help out with. We have access to 2 of the major reinsurance manuals that most carriers use, Swiss Re and Gen Re, and we also have Prudential's proprietary manual. So between all 3 of those, we can usually come up with some, good idea of a good carrier to place your case with, and what, again, to expect the pricing expectations to be. We also have excellent relationships with our carrier partners and the underwriting management there. We've met many of them at industry functions. We're just a phone call away. I can say, hey, it's Dorothy. I don't even need to say it's Dorothy from Highland, because we know them all very, very well. And we can really use those relationships when it comes to trying to negotiate your cases. So I think, Highland also has many other teams that can help in the whole process of writing a case, whether it's determining the pricing, whether it's determining what type of product to use, whatever the case may be. I mean, Highland is a large firm with quite a few very talented people in it, and we can help out with just about anything you need as far as life insurance or long-term care estates and annuities. We kind of do it all.
So, Dorothy, if I'm a financial services professional and I haven't spent an extraordinary amount of time in the life insurance space, are you telling me that with these I gotta gals and these informals, that I don't have to pick a carrier on my own and hope that I got it right based on what the client told me? Are you telling me that you can help me before I have to pick an application to apply with that I can get a sense of what the risk looks like?
Oh, 100%. And that is good field underwriting. That is starting the case off on the right foot by getting an idea of where to place it and at what cost. And we have a variety of questionnaires from things that are very specific to, cancers or heart issues. And we also have general questionnaires. Like if you don't want to necessarily have that verbal conversation, we can always send you different questionnaires that your clients can fill out and then can come right back to us, and we can help you at that point determine what's going to go on. But yeah, definitely we're here to help from the beginning, because that's honestly the best place to start.
Yeah, so the impaired risk piece is a big deal because a lot of people otherwise assume they can't get coverage. And a lot of the most common impairments today, you mentioned prostate health and prostate cancer, but our ability to even get some cancers, not necessarily prostate per se, but even at preferred rates, is something that from 20 years ago was not possible.
Right.
There's much more we can do now with that good intelligence up front. And so our ability to go to multiple carriers with this information from the listeners on behalf of their clients gives us the opportunity to give them their best foot forward in terms of pricing. Well, thank you for that.
Sure.
Would you mention for a second, when you get a really, really interesting case that's not impaired risk, say that you're just asked for help and it just is because the person needs a lot of term insurance because they're a key man or a key woman in a business that they work in. Other than impaired risk, you specialize in being able to line up that coverage too, right? Because of our multiple carrier access. Can you talk a minute about that?
Yes, handling large cases like that is especially important to get it right from the very beginning, because you don't want to do what's called violating jumbo. People can only get X amount of coverage, to start with on the books, and then you have to kind of go and layer it up backwards. But if you go out to the market the wrong way from the beginning, you mess it up at the start. And then it's really very difficult to unravel it. So when you have a very large, complex financial case like that, it's important to set it up the right way, to tee it up the right way from the very beginning, so that you don't have to go backwards and try and undo messes that were already made.
Thank you. And, I mentioned at the beginning of the questions that I was going to pose to you and Nancy around the difference between mortality and morbidity. And, it's interesting when we're talking about impaired risk and the life insurance piece, we're clearly looking at what the life expectancy will ultimately be, which is what dictates price. And Nancy, we've been talking about that and akin to mortality so far in this discussion with respect to what we do to help with underwriting. What is the difference between that and morbidity? So when you're talking about the considerations around longevity planning, or some people are using that longevity risk nomenclature, they want to add long-term care into the mix. How is that different from mortality?
Okay, so mortality, as you said, is what we look at on the life insurance side. How long are you going to live? Is it going to be longer or shorter than the average life expectancy, male and female? And morbidity, which is what comes into play for long-term care, is more about how well you're going to live the remainder of your days. So how independent are you going to be able to stay? Are you going to require some help just with your daily activities? It's not the same underwriting at all. So we got a lot of folks who have gone through some life insurance, and we've seen it both ways. They're like, I just got a preferred plus on life insurance. I should be great for this long-term care stuff. But there's things that aren't going to kill you that are going to affect the balance of your life. So we have to look at totally different aspects of a person's health history, oftentimes when it comes to a long-term care discussion.
So give us some examples about that. That is very perplexing. And when we talk about managing our customers' expectations, our customers are you. your customers are your clients, and we want to make sure that we're setting you up for success with your client conversations. So give us some examples, Dorothy and Nancy, about things that would be health concerns for the mortality specifically versus morbidity.
Well, for mortality, you're looking more at a heart attack killing you rather than a heart attack disabling you. And what are the odds of either one of those happening during underwriting, or certain types of cancers that are more likely to, basically cause a mortality event than or more of a morbidity event. And that's where life insurance underwriting is sometimes a little bit more black and white than long-term care underwriting. But they go hand in hand, but yet they're completely separate. So if that clears it up, I hope that really does.
Clear as can be for the moment. Nancy, how about on the morbidity front? Give us some examples of impairments or health concerns that you might be taking into consideration there in a different way.
Sure. So again, the things that aren't going to kill you, but may make you need care during the rest of your life. Things that might be progressive. So the obvious ones are the chronic degeneratives, MS, Parkinson's, ALS, any cognitive issues. But the ones that people don't think about often are chronic pain, back issues, diabetes with complications because it can lead to other issues, build. So there's the old adage of you can never be too rich or too thin, except in long-term care world, you can be too thin. So everybody tends to think of the overweight client, and I will say the guidelines are really quite generous. So there's a wide range, but in the life insurance world, if somebody is heavier, they might get rated up and have a higher expense to their coverage. In the long-term care world, if you're outside of the range, we can't get you any coverage. And so people do think of the overweight side of things for clients because you can see how it impairs mobility for folks, right? You see people on their little scooters in the stores and whatnot, but they don't think about the too thin side. And I've had only a handful over the years probably, but men and a couple, women primarily, and a couple men who were too slim. The issue there being that typically thinner, they're worried about brittle bones. Mm-hmm. And as we age, the potential for falls, whether it's something to do with a health issue or simply tripping, but not being able to catch yourself as well as we age, the potential for broken bones comes into play quite a bit. So build is one that usually catches everybody off guard.
And do you need to get different medical records for these different concerns, or if you provide or if Highland's going to obtain them on your behalf for your client, the medical records, are the same records being reviewed for both considerations, but looked at through a different lens?
It's going to be the same records, obviously, because that's your records. They are going to look at it differently, whether it's the life insurance or long-term care risk, because whether we're looking at mortality or morbidity. Mm-hmm. But there are also some products in the long-term care arena that combine the two products, as you mentioned, Teague. But there are some also where we don't get records, where it's just going to be a phone interview. And that sometimes can help certain clients who may have not a lot of really bad things, but some light combinations, or their self-assessment from visiting their doctor is different. What I mean by that is, the doctor has you on a number of medications and you're fine. When you go for your visit, he says, you're doing great. We're not going to change anything. So self-assessment is, I'm perfectly healthy, more or less. But if we got the doctor's records, it might show that everything's not quite in as much control as we'd like to see. But on the products that do just a phone interview, if you can answer all the questions accurately and say you're in good shape, you have a better chance of getting that coverage.
Well, that's so interesting because, we're talking about underwriting, but I think if I was a caller and a member of the Females in Finance group, it would beg the question, if that is the situation I find myself in, and I've got all these complicating factors that are going to keep me from being able to get the coverage, how are you, Nancy or Dorothy, going to help me figure out how to pivot to that insurance solution that only requires that personal history interview from an underwriting perspective only? Are you going to just tell me I've got to go to the website? How are you going to direct me to figure out where to go for that?
Okay, I'll throw this back to you in a second, Dorothy.
Okay.
But what I would say is exactly what Dorothy mentioned previously. The more information we have up front, that field underwriting, the better we can do. And typically in the long-term care arena, because we do have the different types of underwriting with the different types of product, I love to get as much information up front, not necessarily the full records, but just, list of the medications, surgeries or things I see the doctor for. And even just from that, we can pretty much say, hey, this person's got diabetes. They're on 70 units of insulin. I know I can't get them traditional product. I know I can't get them a linked benefit product, but maybe I can get them a life. So all the info we have up front, when you come and say they want long-term care, we'll come back and say, here's your options. Okay, so you don't have to pre-decide that. And even if it's not what you were thinking of up front as their planner, we can help guide you to finding the appropriate thing for that client's history. Dorothy, I'll let you.
Well, there's something that gets very confusing, and it kind of goes back to what you said a little bit before, Teague. Your doctor says you're fine, so you think you're in great shape. Well, the difference between underwriting medicine and medical medicine comes into play quite frequently, because your doctor says, okay, we're not changing anything. You're doing great. Everything looks fine. That's the whole point of what they're saying. They can keep following you. And if something does go wrong, they have the ability to change it, change the medication, do a different test, do something like that. The underwriter has right then, as you are exactly that day, and perhaps, yes, you're stable, but stable doesn't necessarily mean great. So there's a big kind of a disconnect between the medical medicine and underwriting medicine. And that is something that, I see every single day. So I can help to navigate that a little bit better, and to kind of have a better idea of what client or what carrier to go to and how to best approach going there, because it is definitely different. And it's a lot is based on not just your stability, but your odds. It's kind of like a risk. Your odds of developing something else are going to be higher than somebody who doesn't have X impairment. And so we can help kind of navigate where to go and how to best approach that.
Well, thank you. And that leads me to my next question, because the thing that we're not highlighting now, and maybe we will do in a future call when you meet more Highland experts, is the product analysis team and the case designers. When you need to pivot or what you are hoping to accomplish isn't going to work, Nancy and Dorothy and their colleagues are able to then go to, if you will, the wizards behind the curtain to figure out where and how we can, if you will, get a product or a program that will meet the needs of the risk as you presented them. And so there are, as many different products and flavors within the products. It's very hard to keep track of. And the thing that I was thinking that the folks on the call might want to also know is, how do we navigate, you use that word, Dorothy, the differences between things like, if I need a long-term care rider, or Nancy, you threw out some terminology. I'll put this one to you: traditional versus linked benefit. And then there's this critical illness rider that we hear about. And that's not long-term care, but a lot of times it would seem that gets thrown into the mix. So for the listeners' consideration, what might they want to keep in mind in terms of thinking about those different kinds of product options, or what they should be aware of?
I'm going to say the awareness of the real general differences between the products is most important. Honestly, I'd say try not to get too deep in, because that's kind of what we're going to help you with. Because I often find people will say, they want a rider on a life policy, and but they are thinking maybe a long-term care rider. And when we go through the health stuff, we say, there's really going to be issues with that. But there are these chronic illness riders. And in most people's minds, they sort of sound the same. Okay, most people think long-term care is chronic. There's a difference in the marketplace without getting too deep in, where the chronic conditions, chronic illness riders typically have to be a permanent condition, so you can never recover. And although that's true with a number of long-term care instances as well, there's also things you can recover from. So 50% of home care claims actually end in recovery. So there's a lot of things, whether it is simply joint replacements or maybe a minor stroke or a car accident, things that people can recover from, where long-term care and long-term care riders will pay, but a chronic illness rider would not. That's meant for the truly chronic stuff. But in the underwriting scheme of things, that's also where we might have more leeway, because some of those chronic illness riders, because they don't pay as frequently for all care needs, can take some higher risks. So that, again, is where I think we add value to what you're trying to do for your clients without you having to become experts in that.
Right, because you guys are the experts. As my experience has been, the two of you combined have forgotten more than most everybody else knows. It's just, it changes so fast.
It does.
Tell us this, why are these important? Why are these plans important for women? Women planners, women clients. Obviously, the women planners listening in don't just have to plan for women. Men would really benefit too, and I know many of them have male clients. But just in particular, what makes it important for the women?
Okay, I'll chime in here, and I think it's about, as you started with, T, longevity, right? I think we all know women tend to live longer than men. Not all the time, but in general we do. Yes. The good side is we live longer. The other side is we tend to need more of the care, because the longer you live, the greater the likelihood is of needing some care. And exactly what you said, Teague, about female advisors, women kind of have a double whammy. So not only do we tend to be the ones who need more care in the future, we also tend to be more of the caregivers for family members who need care. So we kind of get hit on both sides. But just to throw out a couple of quick stats, women in general count for 2/3 of the claims in the long-term care world today. And again, women tend to have a longer claim period than men. So just for a real quick number, men on average need care for 2.2 years. Women on average need 3.7. So it just has to do with how long we're going to live and what we might see.
Thank you. I've got one last question, if you ladies will humor me. Dorothy, this one will kind of go back to almost what you started with, which is, tell us, this thing that you're so passionate about with field underwriting. I just wanted to kind of go back to that for a second. Field underwriting can mean a lot of things, but specifically to what you were talking about with really being able to manage the client's expectations. Why doesn't that just seem like it's more work for the agent? Why would they be motivated to do that?
Well, I think managing the expectations from the beginning, as I had mentioned, just makes the entire process. Applying for life insurance is can be a very unpleasant and invasive process. And so if your clients are prepared for that, because the need is there, the need's not going to solve itself. So we have to do something to solve their need. By making it more of a pleasant experience, by having a client know what to expect, how long the process is going to take, and of course, most importantly, how much it's going to cost them, that equals a much more pleasant experience for your client, which equals a happy client. And a happy client is more likely to cause good referrals, or to go and talk to their friends and to their colleagues, maybe other people in their businesses, about what they experienced. And if they have a good experience, that's just going to equal referrals for you, which will obviously increase your bottom line and help build your book of business by bringing you more clients. And, I think we all know a happy client is a lot easier to deal with than a not so happy client. But I think the bottom line is, honestly, good field underwriting, managing expectations will increase your bottom line.
Thank you for that. Before we conclude, was there anything that our subject matter experts in Nancy and Dorothy that you'd like to say to our listeners before I wrap up our time together today?
I just add one thing to piggyback on what Dorothy was just talking about for your book of business. So maybe a little bit of a ideal client profile if you're trying to really segment into who you want to be talking to first, at least for the long-term care side of things. I'll weigh in, and probably obviously I'm going to say women. I would say about age 52 and up. Anybody single, whether that's single, divorced, widowed, because they don't have as many options for somebody in their home to help with care. Folks with some money on the sidelines, whether it's in CDs or in cash, and really generally just anybody doing planning for their future that are concerned about the gap that they have if they haven't considered how longevity could affect the plan.
Wonderful, thank you. So I think what we'll do is pass on Q&A. We balance these types of things with, we want you to be educated and take something from today's call, but we also ultimately want you to be able to do what you do best, and that is you run your business and do what you need to do with your clients, and then just know that we're available to help you. And so if nothing else, we hope that we conveyed that we're standing by ready to help you. Next month's Meet the Expert series is going to highlight another colleague of ours, Peggy Richardson. She's going to be talking to you about our annuity business and how to use annuities to help grow your practice. And with that, if anything that you heard you have a question about or you'd like to get more information about, I mentioned your Highland business partners, Anne-Marie Norick and Jennifer Connelly, are standing by to take your calls or your emails. So Jennifer or Anne-Marie, do you want to jump in and provide your contact information, or would you like me to do that?
I am here, so I would be glad to do that. So as always, you know, as Teague said, that we are available at any time to help you out. And ladies, thank you so much for this really informative presentation. I know that before this call, I was actually researching my own term policy because I want to convert my term policy and add the long-term care rider. I'm currently young and healthy, and of course, I would love to have the permanent coverage, but don't want to take my health for granted. And so I look at that because I know I'm living till 100, so I'm going to need that care.
You go, girl.
Yeah. So thank you all for your support and for your expertise. So my phone number is 617-510-4371. And you can also contact me on my email, which is jtconnelly, CONNELLY @highland.com. And Anne-Marie's on the line too, so she'll also give her information. Either one of us or anyone on the call here would love to help you in any way.
Mhm.
Yeah, and you can also contact me if you can't get a hold of Jen. My cell phone is 716-523-3922, and my email is anorick, NORECK, @highland.com. Thank you again for your time today. We really do appreciate it, and we look forward to talking to you girls soon.
Thank you, ladies.
Thank
Bye-bye.
you, everyone.
Thanks,
Bye.
ladies. Have a great day.
Thanks, you too.
Bye-bye.